Have you ever wondered why so many rich people have so much debt? Even billionaires with hundreds of billions of dollars still have a lot of debt. You borrow money when you don't have the cash to buy it. You use your credit card when your checking account is empty. Even corporations that worth trillions of dollars, Apple, Amazon, McDonald's, Google, all have hundreds of billions of dollars of debt. Apple, for example, carries a debt of $98 billion. Microsoft has $62 billion of debt. Our entire lives, we are taught that we have to avoid debt at all costs because debt is slavery, debt is something bad. And yet, the richest people in the world use the debt all the time. Do they know something that the rest of us don't? Why do some people end up financially miserable using debt while others making insane amounts of money with debt? The entire tax code was designed in such a way that we make some people, especially the poor people, pay most of the taxes. But to help the rich people to avoid taxes, we have created something called debt. Yes, debt has always existed throughout the entire history, but we have changed the understanding of debt within the tax code and turned it into a loophole that would allow rich people to avoid taxes. Let's say for the sake of simplification that income tax is 20%. And the point of taxes is that for the government to generate income to fund the government, to fund different government programs. On one side, we have somebody who's making $200,000. On the other side, we have someone who makes $50,000. And if the income tax is 20%, then the guy who is richer is paying $40,000 in taxes, while the other person who is making $50,000 is paying $10,000 in taxes. So at first glance, it seems like the tax code is extremely fair. The more money you make, the more taxes you pay. And the United States has a progressive tax system, which means that the more money you make, the higher is going to be your tax bracket. So the more taxes you pay. And the entire system seems like it's a fair system that is taking into advantage or into account everybody's interest. But it only looks like that. If everyone is paying so much taxes, why is the government having almost a $2 trillion deficit? On one side, you can make the argument that politicians are really bad at spending money, and that's why they're wasting so much taxpayers' money, and they have to borrow extra $1.8 trillion to balance the budget. But on the other side, think about it for a moment. The United States is the wealthiest country that has ever existed on planet Earth. The kind of wealth that the United States is creating is unimaginable for most people. The United States have so many billionaires, the world's most successful corporations. These corporations make the kind of money that you and I cannot even imagine in our wildest dreams. And yet we still cannot possibly balance the budget. The United States has almost 813 billionaires. We also have 22 million millionaires. There are more millionaires in the United States than the amount of people that exist in many countries across the globe. On top of that, United States has the most valuable companies in the world. Some of these corporations make more money than entire nations on the other side of the ocean. Last year alone, corporations made $29 trillion in total. If these corporations would pay 5% of that income into taxes, it will amount to $1.5 trillion. And it will close the $1.8 trillion deficit that the government is suffering right now. And we have not included the millionaires who are supposed to pay more taxes, or the billionaires who are not paying almost no taxes or whatsoever. So if the corporations alone will pay a little bit more in taxes, we would not have an entire deficit at all. How do all these billionaires and millionaires or corporations end up avoiding so much taxes? The answer is very simple and straightforward. Debt. For you, debt might associate with a credit card debt, with a mortgage, with a car loan, or a personal loan. You might owe your friends some money. But for corporations, millionaires, and rich people, debt is a completely different thing. Debt is the best tool to avoid paying taxes, and in fact, it can also be used to make even more money. There are two different kinds of debts. You have stupid debt, that's the debt that most people actually end up using, such as your credit card. And then you have smart debt. And this is the debt that billionaires often use. But to understand that, we have to answer a different question. What is money? Most people don't have a clue of what money truly is. Now, for most of human history, gold was playing the role of money, and it made sense. So if I wanted to buy something, I would take a piece of my gold and I would give it to somebody else, and in exchange, I will get that product or service. If I want to loan money to people, I would loan my gold. And I will not have that gold back unless I will be given back that loan by the people or from the people to whom I loaned that gold in the first place. However, today money has a completely different understanding. Money today is simply a unit of measurement. Just like we have created miles to measure the distance between one place and another. If you want to go from your house to a Walmart that is closest to you, let's say it's 5 miles. Do you actually touch those miles? Do you feel those miles? Absolutely not. Those miles don't exist. It's simply a unit of measurement that we have created to measure the distance between you and the closest Walmart. The same thing with money today. That money doesn't exist at all. All of those trillions of dollars that you hear about that billionaires have don't actually exist anywhere. They're simply a unit of measurement to measure the value of those things. When money was just paper, it was still considered money to a certain extent because you couldn't simply print unlimited amounts of money. And we have a lot of examples historically where the government has printed too much money. And when the country was filled with all of this cash, it ended up with a hyperinflation where the money lost its value. Today, we no longer have that problem. 97% of all the money that exists in the world are nothing but digits in the computers. They can be created by any bank today in the world and they will instantly enter the economy and nothing has actually been created. And it doesn't take much for the bank to just write down those digits in the computers. You want $1 million? Boom, it's easily created by the bank. You want $10 billion? JP Morgan can create it within a glimpse of an eye. You can use that money. You can buy yachts, you can buy mansions, luxury houses. You can buy whatever you want with that unimaginable or imaginary money that we have created out of nowhere. We can't be straightforward with this because it might seem like a conspiracy theory. So we've created two types of income. We have taxable income and we have non-taxable income. And that is the purest form of non-taxable income. It might not make sense to a lot of people because at the end of the day, it still ends up as a debt. And debt is bad because you have to pay interest. But what if you actually can get that debt at 0% interest rate with no deadline at all? That is the perfect kind of debt that you want to receive. If your employer tomorrow would tell you, listen, John, instead of paying you $5,000 every month as a paycheck, we are going to give you a loan of $5,000 every single month at 0% interest rate and there is no deadline to pay it back. Will you accept that? I might owe back that money to my employer, but because it's at 0% interest rate, it's not actually growing day by day. And secondly, there is no deadline to pay that money back. And if the IRS will come and ask me to pay taxes, I can easily say that this is not income. I don't have to pay taxes on that. Theoretically, I have to pay that money back sometime back to my employer. So it's debt. And I don't have to pay a dime in taxes for that money. And it might seem too simple to believe, or it might seem too good to be true, but this is exactly what is happening in the global financial system. Let's take it one step forward. You're going to go to the bank and you're going to borrow $1 million and buy a house for that money. And you're going to rent that house to someone. You borrowed money at 0% interest rate. You bought a house that you can rent out to someone else. There were periods not that long ago where some of the central banks across the globe literally had 0% interest rate, but that's a topic for a different video. Now let me show you a step-by-step process how you can do the exact same thing. Use debt to create sources of income just like rich people do. Let's say you have a portfolio of $1 million. And let's say for the sake of simplification that all your portfolio consists of the S&P 500 that historically proved to make 10% annually. This is all of the assets that you have. And you want to buy a house. The price of the house is $3.25 million. Like a wise and smart person, you're going to go and get a mortgage because why would you pay $3.25 million? In fact, you don't even have that kind of money in order to buy that house. So taking a mortgage at a good interest rate or a mortgage rate might make sense. But in order to get that mortgage, you have to make a down payment of 20%, which in this case is going to be $650,000. That's 20% down payment. But you might need to sell a portion of your portfolio because you're not liquid. You don't have that much cash in the bank. In fact, let's make it even easier and simpler. Let's say that you don't have any cash or whatsoever in the bank to simplify the entire example. You will be selling $650,000 worth of your stocks. Let's say that those stocks have been purchased at $350,000 when you bought them. And now you're selling them for $650,000. So you're making a capital gain of $300,000. A $350,000 investment, you're selling them for $650,000, and that leaves you with a profit of $300,000. You have to pay a federal income tax of 15 to 20%. Assuming that you have held these stocks for a very long time, in this case, it will be $60,000. You also have most likely to pay a state tax, and that's around 5 to 13%. In this case, it will be around $20,000, and that leaves you with a total taxes of $80,000, which means that even if you end up selling $650,000 worth of your stocks, you will not get that much. You will only be left with $570,000. So the question is that how much of your portfolio you have to sell? Maybe $800,000, maybe $900,000, maybe even more than that in order to make the down payment. Why would you invest in the stock market when at the end of the day you have to sell all of these investments when you want to buy a house? But that's how a poor person thinks, because a rich person understands how the entire stock market works, and he understands the benefits of investing and keeping a very good portfolio because it allows them to avoid this $80,000 in taxes. But this is just part of the story, because if you end up selling your $650,000 or God forbid your entire portfolio of $1 million, you are going to miss your opportunity of keeping that money in the stock market, because over the next 20 years, it is going to grow at an annual 10% rate and will grow to almost $7 million. So $80,000 of taxes that you pay today to avoid to buy that house is simply a fraction of what you're actually going to lose in the long run. In the long run, it is going to cost you almost $7 million. So is there a strategy where you don't have to sell your stocks, but at the same time, you can buy that house, your dream house that you always wanted, for $3 million? You're going to go to the bank and you're going to borrow $650,000 at 5% interest rate, because that's the average interest rate that we have in the market right now, since the Fed's interest rate are about 4.5%. So why would the bank give you $650,000 of loan at 5% interest rate? Well, you have a stock portfolio of $1 million over here, and you can borrow that debt against your stocks. Now, instead of paying $80,000 in taxes, that money will instantly be deposited into your bank account that you can use in order to buy that house. So you paid 0% in interest rate. But most importantly, you have saved that portfolio and you're not missing the opportunity cost of $7 million that you will make in the next 20 years. And if you keep that money for much longer, let's say for 40 years, 50 years, then it can easily turn to dozens of millions of dollars, maybe even more than $100 million. And one day you can pass it down to your children and your children will be millionaires as well. But you might say, I still have to pay the bank a 5% interest rate, right? So it's not actually free money. Don't you forget that your portfolio is making you an annual return of 10% since you are being invested in the S&P 500. So on one side, you have to pay 5% to the bank. On the other side, you're making 10%. So if you deduct one from the other, you still end up making 5%. So yes, in the long run, you're making way less money than your $7 million, but nevertheless, you're making half of that. Whereas if you sell your entire portfolio, you will be left with absolutely nothing. You will miss the entire $7 million and you also will pay $80,000 in taxes. But on the second example, you're not selling any of your stocks. You're borrowing against your stocks. You're avoiding the $80,000 in taxes, which is why rich people never pay taxes, because they use this strategy all the time. And thirdly, you will still end up with millions of dollars of your portfolio. And here is the beauty. Over time, your portfolio keeps growing. And when your portfolio, let's say, reaches $2 million, you can again borrow against your $2 million because the first money that you borrowed was against $1 million, which is why they only gave you $650,000. Now your portfolio worth 5 years from now $2 million, you can get another $650,000. In fact, sometime in the future when interest rates will be dropped, you can refinance your loan at a much lower interest rate. Now you're paying 5% in interest rate, you might be paying 3%, maybe 2%. And your monthly payments on that loan will keep decreasing. And that's why if you take a look at any billionaire right now, when they want to buy a company, when they want to buy a business, they don't instantly get cash to buy that business. What they will do instead, they will secure a loan from the bank and then buy that. When Elon Musk purchased Twitter, he didn't use all of his money to buy Twitter. He secured most of that by financing through the bank. Take this example and apply it with hundreds of millions of dollars, in some cases billions of dollars. And that's why rich people are not worried about that. They're not worried about taxes. And that's why you look at the tax system and you see that rich people are not paying that much taxes because rich people are very busy buying assets. They're very busy investing in the stock market. They're very busy buying stocks in the market. Why? Because they can then borrow against those stocks and avoid those taxes. Well, the vast majority of people have a monthly paycheck where they have to pay income tax and also payroll tax. Sometimes you might even see that some CEOs don't have any kind of income, like they get paid $0, just like Elon Musk. And some people might say, oh, what a good person he is. He's not getting income from his business. He must be such a generous person. He must be an angel that is walking on the earth, that is not willing to accept a dime of income. But if you actually dig into his sources of income, instead of being paid a paycheck, he's getting a stock compensation for the company. And then he can borrow money from a bank against his stocks that he actually got from the company. And over time, as the value of those stocks keep growing because the company is growing, because the company is making more money, he can keep borrowing more and more money. On the other side, if he actually received that paycheck every single month like you do, then he is supposed to pay taxes on that money, and most of that will go to the government. Imagine you are the CEO of a multi-trillion-dollar corporation and you're getting paid $10 million in income. Do you know how much income tax you will pay on that? At least half of that money is directly going into the pockets of the government. Amazon last year made $33 billion. And the corporate income tax in the US is 21%. So logically, Amazon's supposed to pay 21% in corporate income tax. But in reality, if you look at their balance sheets and the income statement, you'll find out that they have paid $2.3 billion in taxes. That's just 7% of the $33 billion. And that's because we have something called income, and then we have taxable income. We have pre-tax profit and after-tax profit. When a corporation or a business want to start a certain type of a project, they will never use their cash or their money in order to build that factory, hire more people, build a new product, or start a new project. They will instead borrow hundreds of millions of dollars, if not billions of dollars, at 5% interest rate, for example, because that project will get them 10% or 15%. And then they will be paying millions of dollars, or in some cases, hundreds of millions of dollars in interest payments to the bank. And interest payments are deductible, which means that they can deduct them and lower down their taxable income. And that's why every company that you see in the Fortune 500, the S&P 500, they are borrowing the kind of money that you cannot possibly comprehend, because it's much better to use other people's money, especially the bank's money. The bank is making that money out of thin air. That money doesn't even exist in the first place, and they can create money out of absolutely nothing and give it to you. You use that money, you build your factory, you start your project, and you make 15% return on that project. You pay the bank back 5%. And because you borrowed that money, you have to pay interest. You use those interests as deductions on your financial statements, and your taxable income goes down. And that's why when you look at the sources of revenue, you see corporations are paying a small, tiny fraction of the total revenues. And all of this is allowed because we have a complicated, smart financial system that allows one group of people to enormously profit out of that, while the vast majority of people end up paying most of the taxes. And that's why they don't teach you financial education in schools. They don't teach you how the entire global financial system works. That's why nobody nobody teaches you how to start investing, how to buy the right asset, how to use those investing strategies in order to borrow money against them. So if you want to find out more about these investing tactics that the rich people use to avoid paying taxes, but more than that, they use them to make a lot of money, then you can check the first link in the description and find out more. That's it for today, guys. Hope you guys enjoyed. Thanks for watching, and I will see you in the next one.